Hello, everyone, and welcome to tonight's webinar. I'm Hong from Inter-Pacific Securities, and thank you for spending your time with us tonight. We are really excited for today's sessions because we will be divided into a product that offers unique trading opportunities, which is structured warrants. I know you guys maybe heard that structured warrants can make big money, but still not sure what's going on, how is it works. And tonight, we are going to let you know how structured warrants works to help you leverage your investments. We are privileged to have with us Afiq Suhaimi, who is part of the Macquarie Warrants Malaysia desk. Afiq has been actively involved in the issuance, sales, and the marketing of structured warrants on Bursa Malaysia. And on top of that, he plays a key role in educating the Malaysian investing community on how these products works. So you are definitely in a good hand tonight. So please don't hesitate to leave your questions in the comment sections and Afiq will answer it accordingly. Afiq will guide us through how structured warrants can help you to gain the leverage in both bull and the bear market, and also how to use some of the tools to help you to select some of the attractive warrants on the market. So let's welcome Afiq, and floor leaves to you.
All right, thank you so much, Hong, for having me on your podcast tonight. Before I start, just an introduction to myself. I'm part of the sales team for Macquarie. I know Hong has been given a quite brief introduction, but just to let you know that Macquarie has been issuing structured warrants for almost for more than a decade now, right? Since 2014. So we are what you call a pioneer in structured warrants. So before I start on my my sharing session today, I just want you guys to know that this session will include both fundamental and technical on structured warrants. So just tune back and since this is on YouTube as well, you can just view back what I have been sharing to you. So I just want you guys to know that the presentation material that I'll be sharing with you has not been reviewed by the Securities Commission of Malaysia. And investment products, including warrants, are subject to significant investment risk, which is including the possible loss of the principal amount invested. All right, and I'll be showing you some case studies, and to take in mind that all the past performance, all the case studies that I've showed, is not an indicative of future performance. So all the examples are for illustration purposes, and it's not a recommendation or investment views or strategies. All right. So let's start with the fundamentals first. So you want to understand what is structured warrants and how it works. Basically, structured warrants are different than company warrants. I mean, you've heard of company warrants, right? But structured warrant is different. It's listed in Bursa Malaysia and traded on Bursa Malaysia. It is a derivative product which tracks the performance of underlying, and that underlying can be either a single stocks, index, ETF, and also commodities. All right, so there can be a lot more underlyings. So warrant is just a tool for you to leverage the underlying movement. All right. So the purpose of warrant, like I said, leverage, right, is to provide exposure to the underlying for a fraction of its underlying. A fraction means you only pay a fraction of the price compared to buying the underlying itself. And one thing about structured warrant is there is no margin call. So investors cannot lose more than what you initially invested, which means your capital. All right, I'll explain more on that in the next slide. But 4 things that you need to know about structured warrants and why you must trade structured warrant, or why it's one of the most famous investment tools in the market right now, is the gearing effect. So each warrant comes with gearing. It enables warrants to move in a bigger percentage. Right? And warrant also provides you exposure to foreign exchange. So you can trade warrants over Hong Kong stocks, US index, the Hang Seng index, the Nikkei index, the US indices, right? Without even leaving Bursa Malaysia. So you can use that. You can trade it inside Bursa, right? By using warrants. And by trading warrants, it also enables you to have excess capital, because warrants are quite inexpensive in its nature. So with that, you have more capital to diversify your portfolio, right? And one thing why people use warrant is because they can leverage both on the bull and the bear market, right? They can take advantage on both market direction. I'll show you that in my case studies in later. So how you can identify warrant is the first one is you need to understand the C or the CW stand for call warrant basically. So the first part is the underlying share index or the name of the warrant, the name of the underlying, right? And then the C equals to call, or it can be CW call warrant. And then the 1 or 1 to 99, A to Z is just a series number because you might have more than one POPMARK warrant. You have more than one warrant over 10 cents. So that's why we have this series which is provided by Bursa. All right. So how you identify put warrant is the warrant type is either H or PW. The rest are all the same. The series is just for you to identify what warrant it is. Okay. So just remember C and H or PW and also CW. It's only these four in the market that is equivalent to structured warrants. Other than that, it is company warrants, right? So some of you might think that structured warrant is similar to option. I can tell you that it is. On a certain extent, the technicalities is the same. So structured warrant and options are the same, right? So options, you have call options and put option, right, on a specific underlying, the same as structured warrants. So in Malaysia, you don't have options, but alternatively, you have structured warrants to gain leverage on a specific underlying. Okay, so the difference between these two are structured warrants are issued by third-party financial entity. It can be banks, it can be issuers such as Macquarie, and whereas the options are listed on the option exchange, so they are issued by the exchange itself, right? And then there is no market maker in options, in the options market, but in structured warrants there is a market maker. So that it is very important for you to understand that market maker actually provides liquidity to the market. So market maker actually plays a big role in the market. I'll explain to you again later.
Okay.
But in terms of
can you so you are saying the
Yeah.
structured warrants all are traded on the Bursa Malaysia's?
Yes, correct. All structured warrants are traded in Bursa Malaysia. Correct. That's right.
Okay. Can you elaborate more between the differences as saying there's a physical settlement and there's a cash settlement? What does it mean? Do I bought a warrant and then I sell it, I get cash, or the other way?
Okay. That's right. So when you buy warrants and you want to action on that warrant, particular warrant, right? So the only form of settlement that Bursa is allowed in the market is only cash settlement for structured warrants. So cash settlement mean when your warrant is in the money, if you hold it until expiry and you want to exercise your warrant, when it's in the money, you will get cash settlement. You will be paid by cash, compensated by cash. So different to options, right? You have physical settlement. If you want to exercise your options, you have you actually two options. Is either you want to get settled by physical or cash settlement, all right? So
Yeah.
in Bursa Malaysia, it's only cash settlement for structured warrants.
Okay. Great.
All right.
Yes, please continue.
All right. So all structured warrants are traded in the Malaysian ringgit denominated, no other currency. Okay. So when you go into your trading platform, you can look all warrants in ringgit Malaysia. Okay. So that's the difference between warrants and options. But technically, they are just the same the way it works. Okay. And then you also have company warrants, right? You confuse yourself. Hey, there's so many types of warrants in the market, right?
Yeah.
But the same thing when it comes to structured warrants, it's issued by third party, whereas company warrant is issued by the company itself for them to raise capital, right? So structured warrants is used as an investment tool, and there's no market maker in company warrant, so they cannot provide you liquidity. Whatever you buy, you sell at whatever price that is stated. Okay. And the biggest thing that you can see is the tenor itself. Structured warrants is for short-term to medium-term trading. So all the expiry of structured warrant is 3 to 12 months. But company warrant is longer, 2 to 5 years, and then after that tenure, right, you can actually exercise to get physical settlement, physical shares, ordinary shares. So structured warrant again is all just cash settlement. Okay, so for company warrants, how you determine it is just W lah. Other than that, all are structured warrants in Bursa Malaysia. All right, I'll go into the next slide. So I'm just going to go more into the terms that is in structured warrants. So when you try to learn about warrants, right? When you try to trade structured warrants, you get more information, right? You will find all these terms. Okay, so I'm going to show to you lah. So the first terms that is everyone's head lah. Warrant get expiry, is it? Like I said, yes, warrant is for short term to medium term. So it has expiry for 3 months to 12 months. So 3 months usually is just for index, and then index can also be more than that lah. But 12 months up until 12 months is more for warrants of the single stocks. Okay, so it's not suitable for long-term investment, which means you cannot hold long-term because there is a risk of decay. So the longer the expiry, the slower the time decay. Right. So time decay. Yes.
Okay. Just the same about the time decay. So you are saying the longer is the expiry, the slower is the time decay. So is it meaning if the structured warrants is more nearing the expiry date, is it saying is it more bad?
Okay, yes, correct. I say it's bad if you hold until the end. So when it's near to expiry, right, the rate of your warrant, the rate of the decay will be very fast, very, very fast, very sharp. If you hold your warrants from 1 month to, let's say, 6 months, you hold all the 6 months tenor, right? The rate of the warrant to be decreased is faster lah, closer to the expiry. So it's not suitable for long-term investment. It's for you to for short to medium term lah.
Okay, thank you.
Okay. Right. So another part of warrant is when you try to choose different warrant, right? You would look at the sensitivity. Sensitivity is how sensitive your warrant is to the movement of the mother share or the index. So just a rule of thumb is that the lower the number of ticks, the more sensitive the warrant is. You can see this in the life matrix that every issuer provides. So for us, we already give you the sensitivity there. So if you see the CWE3 is 37.06, while CWGB is 60.12. So if I ask you which call warrant is more sensitive, the answer will be the one with the lower number of ticks, which is CWE3, right? It's important for you to understand sensitivity lah, because if you are a trader that has that wants higher rate of risk, right, you want to go for those that is very sensitive because you want your warrant to move faster compared to those who are risk averse, who just wants to hold for quite some time, or 1 week or 2 weeks. Okay.
Yeah. For this information, just now you are showing that on the screen that how can we clients or the traders can get these informations?
Yep, you can get this on Macquarie website. So what you do is just Google Malaysia warrants, and Macquarie would be the first website name that appeared. So just go there and go to the life matrix. So it's under life matrix. Then you can just choose the name of the warrant lah. For example, CWE3. Then you can see already lah all the information.
Okay.
All right. So another one I mentioned about effective gearing, right? So gearing is actually measuring the expected rate of change between the warrants and the underlying, right? If the warrant goes to a certain percentage, if the underlying goes to a certain percentage, for example, if the underlying goes up by 1%, and then the warrant can actually have potential to go up by 5 times, 8 times, or even 3 times. So all this means that it will go by 1%, it will go up by 5%. The warrant will go up by 5%. If underlying goes up by 1%, that warrant can go up by 8%, right? So different warrant has different effective gearing. You can also see this in our life matrix. Okay, so I've explained to you all about the terms. So now I'm just going to introduce you to the warrants that we have listed in Bursa Malaysia lah. We have warrants over the Malaysian single stocks, but again, the exposure that we want to give you is the foreign coverage. So to show to you what we have, one of it is the on the e-commerce side, the Hong Kong single stock side, is the Alibaba, Meituan, Tencent, and Xiaomi. So you can actually leverage into all these names without leaving Bursa Malaysia. You can just use call and put warrant to use to leverage over the bear and the bullish market. All right. So in automobile also we have BYD and NIO, and then the exchange itself, just like Bursa stock, right? In Hong Kong they have HKEX. Right. For F&B we have Mishue. If you've been eating a lot of Mishue ice cream, you know this is the brand. Okay. So in terms of financial service or insurance, we have Ping An, and the most popular name right now in the toy industry is Popmart. Okay, so Popmart is the first structured warrant that we list over this underlying in Bursa Malaysia, and we have Popmart call warrant and Popmart put warrant. So you can see that Popmart right now is close to 200%, more than 200% lah from year to date, right? So if you think that Popmart is at its highest level right now, and there's a probability that it's going to go down soon, so we have put warrant for you lah. If you want to leverage on any potential bearish movement.
So, Afik, you are saying these stocks that's showing on the screen right now, and Macquarie warrants have listed them on the Bursa Malaysia.
Correct. These are all listed in Bursa Malaysia. Currently
So
listed
all
in
the
Malaysia.
one Popmart C1, Mishue C1, they are all listed by Macquarie Warrants Malaysia.
Yes, correct. They are currently
Okay.
active right now. Yep, that's right.
Wow. Okay.
All right. So these are all on the stocks, Hong Kong stocks. In terms of index and ETF, we also offer index over the Hang Seng Index, Hang Seng Tech Index. That's on the Hong Kong market. We also have S&P 500, the Nasdaq 100. That's on the US market. On the Japan market, we have the Nikkei Stock Average. And then on the ETF side, we have A50 China ETF and also the SPDR Gold Trust. So all of these are available by just trading into structured warrants lah, basically. So you don't have to go outside Bursa Malaysia, open an international brokerage account. What you can do is just use your own current account right now with Interpac, right? And then you can just type the name HSI or SP500 or NDX for Nasdaq or Nikkei, and then C or H. C is for call, H is for put. So all of this is available on your trading platform. And all the extra information for you to trade, you can find it on Macquarie website for free, right? So there's an advantage of you actually trading in the warrants over index or ETF compared to the stock itself. One of it is the broader market exposure. So you get exposed over the broader market. For example, if Trump was to announce news on tariff or announce on war, for example, right? So you can actually buy put warrant because you know that the index will go down if if a bad news were to happen, right? So you can buy put warrant to leverage on the downturn of the market, right? Other than that, you can diversify your portfolio, right? You are holding a stock. For example, you're holding a Hong Kong stock or a US stock, right? But you think the market is not doing so good, right? You can diversify by buying put warrants over Bursa Malaysia, over those indices, right? So that's one thing lah. And then there's no single stock risk. For example, if the stock that you are holding is having PN17 or is having a lot of issues, a lot of scandals, right? But if you hold into the index itself, warrants over the index itself, there's no such issue lah. All right, and then you are able to trade the uptrend or the downtrend. So that's going back there to the broader market exposure. You can leverage both on the bull and the bearish market.
So it sounds like doing a hedging. So when the market's going down, and then we are trying to buy the put warrants, which is following the down, and then it will be making money. If the market's going really, really good, then the call warrant will be a tool for you to leverage. Is it sounds like
Correct.
that?
Yes, that's right.
Okay.
Yes. So one thing about warrant is you can use it as a simple investment mechanism. Just buy call warrant, right? If underlying goes up, or simple mechanism if underlying goes down, you can buy put warrant. Simple way of looking at it lah. But you can also use it as a hedging. So there are some strategies that I can show to you later in my slides. So it's all about how you can hedge using put warrants, right? So there's a lot of way you can invest in structured warrants lah. There's a lot of method you can use structured warrants to include it in your portfolio. All right. So, like I said, strategies. So I'll be sharing with you some strategies that you can use with structured warrants. So, for example, but before that, right, you need to understand the concept of moneyness. So when it comes to structured warrants, right, if you want to get cash settlement, at the end of the day, you need to understand that if the warrant is in the money, at the money, or out of the money. In the money, yes, you get cash settlement, and when you exercise, you get the settlement. If your warrant expired at the money or out of the money, you will not get any cash settlement. But this is in the case where if you hold your warrants until expiry. If you are a day trader, you don't have to look at it this way. What you can know is just understand what in the money means, out the money means, at the money means. It's the same as option, right? So in the money means that for call warrant is when the underlying price is above exercise price. And for put warrant, if underlying price is above exercise price, it's out of the money, right? So it is just for you to understand the concept of where the price is and where the exercise price you're targeted is at. So if the current price of that underlying can go up to the excess price, for example, for call warrant, it means your call warrant is in the money already. So you have to play this in your mind lah, okay? So just get to know the concept. You don't have to know everything, but just know what in the money means and how you can detect in the money warrant or if it's out of the money, right?
Okay.
Especially for day
Sorry to
traders.
interrupt. Afiq, for the moneyness of the warrants, generally, which moneyness of the warrants have a better volatility, better
Okay.
volume, better trade? Is it in the money one or at the money one or the out of the money one?
All right. So it's a different thing lah. So look at it this way: if you are someone who can hold warrants that are sensitive, you go for in the money. In the money warrant tends to be very sensitive, but in the money warrant is have more expensive absolute price. The premium is more expensive lah because your warrant is already in the money, right? The exercise price, the current price is bigger than the exercise price for call warrant, for example. So it's very sensitive but expensive. But if you go for out of the money warrants, right? Out of the money warrant tends to be less sensitive, but it is lesser. It's cheaper price lah in terms of the absolute price. It's cheaper in terms of absolute price. So it depends on you lah. What kind of investor you are? Are you the one who are risk averse? Risk averse will go for in the money warrants, because they want it to be quick. They want it to be very sensitive. The one who like risk goes for in the money. The one who are risk averse would go for out of the money warrants usually. But it all depends on you. I cannot tell you which one is better. It depends on your view. It depends on how much risk you can take.
All right.
All right.
Yeah.
Okay. So if you already understand the terms of the moneyness concept, right? In the money, at the money, out of the money, then let's go to the strategies. Because why strategies need in the money is for your risk management. You need to understand how warrant works, because the moneyness equals to, like I say, if it's sensitive or if it's cheap, that's what the moneyness means lah. So basically, you need to understand just the tip of the concept, and then you can actually apply this on strategy. So the first strategy that I want to share with you is the bullish pullback trade, right? So I'll give you an example scenario. If you expect the S&P 500 to rebound after 5 consecutive days of sell-off, it has been down for 5 consecutive days, and you expect it to rebound, but you have insufficient capital to gain substantial exposure through futures contract. So you cannot buy more futures contract, right? Futures are expensive. S&P 500 futures are expensive. So what else can you do? So the potential strategy that you can do is you can consider to take position in S&P 500 call warrants, so you can gain leverage exposure to movement in the US market. Why? Because S&P 500 call warrant actually follows the E-mini S&P 500 futures, right? So you don't have any more capital to buy the futures. What you do is you go to the Malaysian market, to the Bursa market, and you buy the S&P 500 call warrants, right? So this way you can actually leverage in the US market without putting extra capital. Okay, so this means lower initial capital, and then there is no margin call when it comes to structured warrants. All right, so the risk management here is you need to use the technical indicators. For example, when it enters the 8 days of moving average or the 50 days moving average. So when the 8 days and 50 days is wide between each other, when it's well separated, this is when you enter your call warrant. Okay, so basically you consider choosing more responsive call warrant, higher sensitivity. So higher sensitivity call warrant, it can be an in-the-money warrant, right? In-the-money warrant tends to be more sensitive. Okay, so for this kind of trade, right, whenever there is a breakout, and the condition is two things lah. When you see a breakout and then the 8 days moving average, the 50 days moving average is wide, you can enter the call warrant. You can enter using the call warrant, right? And then enter the position with the call warrant. So for structured warrants, for those of you who might not know, you can actually place a stop loss order, right? You can place a stop loss order, and you can also place a auto sell order. So it's the same as what you do for stocks lah, basically. So this is the first strategy lah, basically. When you see there's a bullish breakout going on, right? So very direct. You use call warrant to leverage on the uptrend. Okay. So the second one, okay, I'll give you an example first on the case scenario, right? So just now I talked about S&P 500. So you can trade uptrend or bullish pullback with S&P 500 call warrant. Alright, so you can see on the left side of my screen is the S&P June futures, and then on the right is the call warrant S&P 500. So the relationship is the same. The S&P 500 goes up, call warrant also goes up. It moves in the same direction, right? Right. So just example, this is a real case study. This call warrant S&P 500 C52, exercise level 6,000 with an expiry of 22 September 2025. So when the index features from 21st April to 24th of April went up by 1.9%, close to 2%. At the same time, if you have been buying the S&P 500 call warrant, it actually went up by 18.3%, right? So if you apply this trade, this bullish pullback trade, right, using S&P 500, you've been buying S&P 500 futures, and at the same time you have bought S&P 500 call warrants, right? This is the kind of leverage that you can get lah, basically. When the index is just 1.9%, you actually get 18.3%, right? So this is a real case studies, and then I'm gonna show you more strategy and more case study in the next one. All right. So the second one is more of a protective put trade. So like I said previously, you can buy call warrant straightforward, just call warrant, but at the same time you can actually use put warrant to hedge your portfolio. So I'll give you an example. Before a volatile or high risk event, like a day of the economic data, or the day of an earning relief, or when Trump's tariff is about to happen, right? And then when you think that market is expected to be bearish, and then you are unwilling to sell any potential affected shares in your portfolio, but you want to reduce short-term downside risk, so you can consider to take position in the Hong Kong index put warrant to protect your Hong Kong portfolio, right? For index warrant, which would mean Hang Seng Index or Hang Seng Tech Index. So this way you'll be utilizing a small amount of capital to protect your portfolio against any downside move in the effects underlying. All right, for portfolio hedging or a protective put trade, the risk management here is you need to use 8 days and also 50 days moving average also. So the example price have to stay below 8 days and 50 days, and you can only enter when the price breakout is below the previous low. Right, so just an example for myself, this is the kind of strategies that you can use to trade warrants, right? So this is exponentially for put warrants, right? When the price stays below 8 days and 50 days moving average, you can enter when the price breakout is below the previous low. So for this one, you can consider to use put warrants with longer expiry date, and you can hold the put warrant as a hedge until the event is over, which means until the day of the economic data is over, or until the earnings release is over, right? So this is just an example of how you can use put warrant in your portfolio. Okay, so a case study that I can show you I mentioned that you can hedge using put warrant over Hang Seng Index, right? So this Hang Seng July futures from 8 to 9 July recently, right? And then it went down. His July futures went down, and then the put warrant, it went up because put warrant moved in the opposite direction. So when the HSI July futures went down by 0.9%, the put warrant actually went up by close to 5% in this few days period, right? In this 1 day period. So this is the example that you can see in a real life example using put warrants. Okay, so if you were to apply this back on the strategy that I showed to you, if you know that the market, or if you did your study already, right, you think that the market is going down, there's going to be a bearish signal, and then you use your technical indicators that you can use 8 days moving average and 50 days, and you entered when there is a breakout below the previous low, right? So this is the kind of potential income that you can see if you hold warrants, this put warrant over the Hang Seng July. Okay, right. So another example of strategies that I can show to you is a pre-earnings trade. So this is very direct lah. So when you think that a tech company is about to report earnings in a very volatile market, and according to analysis, it can go up to swing up to 5% or down 5% after earnings. So what you can do is actually you can consider to buy both call and put warrant over the stock, right? So this way you can capture both price movement, upside or downside. So you think that, what happened if I buy both? It will offset the other, right? But there are certain investors or traders who actually does this, right? So this depends on your strategy. I'm just sharing with you the strategy that has been applied in the real world, okay, using structured warrants. So the risk management here is that you can enter at least 3 days before earnings announcement date. So this one you can find in your anywhere basically. So what I found is in TradingView, it says that earnings is coming in on this date, right? 3 days before, you would have been entering with a call warrant or a put warrant. You choose at the money or slightly out of the money warrants for lower capital outlay. But remember, at the money or out of the money warrant tends to be cheaper in the absolute price, cheaper premium, right? And then you can also choose higher sensitivity warrants for faster break even, right? So if you want your warrant to move faster, you can choose the in the money warrant, right? Higher sensitivity warrant, smaller movement in the stock price, okay? So for this kind of trade, you can set a stop loss order for both call and put warrants, right? Very direct way of using warrants to trade. Right. So I talk about all the strategies. How can you actually apply the strategies in the real world, right? So basically, the tools that you need, the most important tools that you need is the live matrix. The live matrix actually promotes price transparency. It shows you the real-time warrants buy and sell prices, right? So you have your chart on your left screen, and then on your left screen also you have your platform, your brokerage platform, right, for you to buy and sell, right? And then on your right screen, you also need a live matrix. Because you want to see where the price of warrant will go, or where the price of warrant will drop, the price of warrant will go up. So the live matrix actually facilitate effective warrant trading plan. All right, it identify whether the warrant spread is on wide or on tight. I'll explain to you in a bit. But before that, I just want you to know that the live matrix we have included a lot of warrant terms in the live matrix, making it easier for you to refer to. You can actually just scan the QR and it will take you directly to the live matrix, right? So the live matrix, it shows you terms such as exercise price, the expiry, the gearing, and also the sensitivity, right? So you can plan your strategies, plan your trading, right? It also shows the range of the bid prices, even down to RM0. If your warrant is up to RM0, right, you can now just see where the warrant will be from 0 to 0.005. So depending on the current level. The matrix also will keep showing even the warrant is traded around 0, right? So that's the new changes that we did, the enhancement that we did for the live matrix, right? So I explained about live matrix, and this is the step that you can use to trade warrants. The first one, you take a view on the underlying market. So the view is whether you are long or short, whether you are bearish or bullish, right? Call or put. You want to buy call, you want to put, and then you set a trading time frame. So your time frame would be: are you a short term, or are you a day trader, or are you someone who wants to swing your position, or you want to hold long term? So that depends on you. You set the trading time frame. You plan what expiry of the warrants that you want to hold. Okay, and then third one, effective gearing. Find the right balance of risk and return. Effective gearing, like I explained, every warrant has its own effective gearing. The higher the gearing, the more the return you will get lah. So basically that's what it means lah, right? So the riskier it is, the more return you will get, the higher the gearing, right? Fourth one is the liquidity of the warrant. You need to know if you can enter or exit easily in that warrant. So this is the 1, 2, 3, 4 is the steps that you need to know when you want to trade such a warrants, right? To show you further, right? So usually I just use my warrant search. Warrant search is also available on our website. To show you further, the step 1, you choose, if you're choosing call warrant, you choose call warrant here. Step 2, you want 1 to 3 months expiry. Right. Step 3, you want 10 to 15 times gearing. You want something to move faster, a lot higher, right? Then step 4, you look at the volume, the liquidity that issuer is giving you. The higher the liquidity, the easier it is for you to buy and sell your position, right? So this is just an example. Yep, Hong.
If we are using these tools, which is from the Macquarie Malaysia Warrants website, right?
Yep.
Is it if I'm using these searchings, is it showing only those structured warrants that is issued by Macquarie, or the others structured warrant will also be shown?
Yep, you can actually see all the other structured warrants from other issuers also using warrant search. So that's the ease of this tool lah, basically. What I do, I actually filter out from all issuers, and then the underlying that I want. For example, I want to trade warrants of a Gamuda, right? I search Gamuda, call warrant, and I search all issuers, and I just compare which one is the cheapest or which one has the most sensitive warrants. So you can use warrant search to actually help you to make a better planning, right?
Okay, great.
Yes, you can access other people's other issuers' warrants as well, but you cannot view their live matrix. The live matrix is only for warrants issued by Macquarie.
Okay.
All right. So okay, I give you an example lah. Assume that you want to trade POPMAT C1. Okay, you already on the warrant search, you already determined that you want to invest in a Hong Kong stock, and you want to call warrant, right? Because you have a bullish view on Hong Kong, because there's a news about Hong Kong that will make it very bullish right now. So you want to buy Hong Kong stocks, call warrant. You want 3 to 6 months expiry, and effective gearing, it doesn't matter. You just want to see first lah, basically. Then you click submit. Down, you choose. You do your own study. You choose. You think POPMAT C1 is the best choice right now for you to go into, because POPMAT is doing very well, right? It's doing very well right now. So you choose POPMAT C1. Next is you go to live matrix. when you already choose from the warrant search, you go to live matrix. So on the live matrix is where you map out your trading plan. All right. So you have the live matrix. First, you determine the entry and exit level of the POPMAT, right? So you can use this for any underlying, but I'm giving POPMAT for example. First, determine the entry and exit level of POPMAT. Assume that you wish to enter at Hong Kong dollar 263 and exit at Hong Kong dollar 274. The entry and exit price of call warrant of the POPMAT C1 will be what? Right? So from the live matrix that I'll show you, right, based on the live matrix, you can actually buy POPMAT C1 at 0.275 and sell at 0.30, right? So you can see, right, at 263 is 263 is buy at the offer, which is 275, 0.275, and you sell at Hong Kong dollar 274, which is at 30 cents on the bid. So general rule lah, when you buy anything lah, you buy on the offer, you sell on the bid, right? So this is what live matrix is showing you. You at what price you bought, or at what price you want to buy, and at what price you can sell, right? So it's actually a list of plan lah, basically, for you to know when to enter and when to exit, right? So this is just example using POPMAT, right? So also, if you use live matrix for risk management, you can also do that. I mentioned that you can use stop loss, right, when you trade warrants. All right. So it's important for you to set a stop loss. Most important is for warrants that are very sensitive or very volatile. Okay. So assuming you bought POPMAT C1 at 29 cents and want to set stop loss at 27 cents. So last defense, which is the 27 cents, is when the underlying bid is at Hong Kong dollar 262.60. That's last defense. All right. So if you see on the live matrix there, the blue box, right? The first defense is 264.2. The last defense is 262.6. Because this is a call warrant example, right? Call warrant example is when you buy, you look at up, it goes up, right? If you put warrant, the live matrix will be different lah. It goes down, right? So this is an example of a call warrant. So if you've already bought 290 and your view is wrong already lah, it goes down, but you already set a stop loss. So your stop loss 270, the last defense is 262.2. So when the underlying goes down to 262.2, when the mother share goes down to 62.2, so you can already hit the stop loss there. So you sold at 270. So basically that's what it means lah. You can set a stop loss for warrants also, right? So that's just a general FYI. All right. So that's all for the tools. I also want to explain to you that there's a lot of risk when you trade structured warrants. For example, there's a market risk. Market risk is whenever there's a view or news regarding the market, right? The tariffs, the OPR, or any kind of big news, a news of war, right? So it can impact the whole market, right? So because our warrant is issued over different kind of foreign underlyings like Hong Kong or the US, right? It will be impacted. So that is the risk that is appeared in structured warrants lah. Otherwise, also there's an exchange rate risk because we have warrants over Hong Kong and the US stocks, right? The US index, right? So there's a risk of exchange. And then gearing wise, also yes, gearing is a double-edged sword. You think the higher the gearing, the more probability of you getting profit, right? But it's also meaning that it's more risk lah, basically. If your view is wrong, the gearing is very high, but the share dropped down a lot, then you get your potential of losses is more lah, basically. It's a double-edged sword, right? So gearing can be your best friend, it can also be your enemy. All right. So just when you choose warrant, just look at the gearing carefully lah. If it's very high gearing, so make sure that you are adapt to the risk. Okay. So limited life just means that every warrant has an expiry and will expire. It will expire in the money or out the money. In the money, if you hold in the money, yes, you get cash settlement. Out of the money, you'll be losing your investment lah, basically, right? You will not get anything if you hold out the money. All right. So just some FAQs, right? So normally when you trade stocks, right, you look at liquidity. That's the normal convention, right? The higher the liquidity of the stock, the better it is lah. You want to go into that stock. It's more liquid, right? But for structured warrant, it's very different, right? Structured warrant is different. You don't look at the traded volume. You don't look at the high volume. You look at the bid volume and ask volume, which is the volume that is prepared by the issuer, provided by the issuer. The higher the bid volume and ask volume, the more easier it is for you to go into structured warrants and to sell your position. Okay, for example, I give you if there's a warrant with 150k bid volume and 200k ask volume, call warrant Y, for example. If you have a position of 500k of that warrant and you want to sell at a bid volume 500k, but the bid volume is only 150k, you have it will be a stagnant order lah, right? You have to wait longer lah for your queue for you to get matched, right? But if you have 500k and you bought call warrant X, it's easier because we can buy back 2 million at once and you only have 500k. It's easier for us to buy back position from you. So don't treat warrant as a stock. Yes, when you trade warrants, you look at the underlying, but when you trade warrants, you don't trade as trading stocks. You don't look at the traded volume. High traded volume does not mean the warrant is good, okay? It can also mean that the warrant is bad and that the warrant is just cheap and people are just buying cheap warrant and following the trend. At the end of the day, something bad might happen also. So just remember to go for warrant with high bid volume and ask volume, the high liquidity, okay? So this is the one that I mentioned earlier about the importance of market maker. Market maker provide liquidity, all right? So it's easy for you to go out and go in your position.
Very different. Very insightful. Afiq, we have questions from the comment sections from the listeners.
Right.
Can you see that?
Yes, I can see it. All right.
So
Dexter, right?
Yeah.
Okay. So Dexter, yes, if you buy a warrant like Niche hot topic, but going to expire next week, do you still think it's tradable or not because following time decay risk? Okay. So time decay risk only applies if you hold warrants overnight or longer than that lah. If you are a day trader, then it's fine. Okay. But warrants that are 2 weeks or 1 week to expiry, right? They are usually worthless lah, I will tell you. So avoid warrants that are lesser than 1 month expiry, right? So that thing is something that everyone needs to know lah when they trade warrants. If you trade warrants if you hold on longer term, if you're a trader who wants to hold, don't go for warrants that are lesser than 1 month, right? If you are a day trader, so it's fine. The time decay risk does not apply to you, right? If you buy and sell the same day, it's fine. Time decay doesn't apply to you. Time decay only applies if you hold overnight or longer. All right. I hope that explains.
I think that also answered the questions already.
Yeah, correct.
Yeah. Now is in the FAQs. Afiq, I think there are many newcomers come to structured warrants in iPad Online. What do you think? Like, what are the common mistakes that new warrant traders that would make when they start to trade to the structured warrant? They are new to the structured warrants. Usually, what are the common mistakes and how can they avoid it?
Okay, I understand the question. So the first common mistake, like I said just now, is they follow the volume, right? You can see right now the highest traded volume in the market is one of the Hang Seng index, right? For the past few weeks, right? So it's where they follow the volume. The volume, like I said, does not mean it's a real trade, all right? Does not mean it's a genuine retail trade. It can also mean that it's a day trader trading. So just to increase volume of the market. But for you as a retail trader, if you want to really trade warrants and if you really want to get the most of your investment, you look at what the market maker is offering to you, the bid volume and the ask volume. Follow the liquidity, right? Do not follow the traded volume. high traded volume does not mean it's a good warrant. All right, so that's one thing. Second thing is when they trade warrants, right? They don't know what the underlying is tracking. For example, for the Hang Seng Index, right? It's actually the Hang Seng Index features. All of our indices are over features, not the cash index, So if you trade warrant and you look at Hang Seng Index chart, it's very wrong. You have to look at Hang Seng Index features, right? So that's one thing. Second thing is futures. They have different contract, right? They roll over every month for Hang Seng and Hang Seng Tech. So when it's near to rollover, they are still looking at the wrong contract. They should have been for right now they should have been looking at July contract, but they're still looking at June contract. That is wrong also because futures contract expires, right? You need to look at the correct contract. All indices tracks futures, and all futures contract will roll over either every month or for US and Nikkei, it's every quarter. All right. And then market making hours is also one of it lah. You need to understand market making hours lah. For Hong Kong stocks, for morning session is 9:15 to 11:58. Afternoon is 2:30 to 4:28. So these are the only time that you can buy and sell your position. All right. Other than that, it's closed. So that is also one of the mistakes lah that traders commonly do. They don't know the session timing.
I saw for the Malaysia KLCI afternoon sessions that is until 4:43. So is it mean after 4:43 then the structured warrants gonna be no trading volume?
There's no buy and sell anymore after 4:43. It goes to auction already, and the market will be closed afterwards. Yeah.
Okay, that explains. Yeah.
All right. Any more questions from the comments?
I think that's it.
Okay. So yeah, I also want to amplify you guys lah. So we have a daily newsletter and some social medias lah. So we are very active in our Telegram channel. We provide a lot of contents on the current news, on structured warrants. Also, we provide research articles, right? So on our Telegram channel and also on our daily newsletter. So we send out emails on whatever is happening in the world right now, global market updates. So if you want to get updated, you can actually just QR and join our channels. These three are our channels lah. But if you have any questions, you can call our hotline. So we are salesperson. We are here to also support you guys for your trading. For example, if you were to stumble into any potential issues, right, on your trading, you don't see the live matrix not working, prices are not updated, anything that is concerning about structured warrants trading, you can call us. If you want to know how to start also, you can call us. And also I can also maybe pass to Hong also lah. If you haven't had a account lah set up, right, you don't have a CDS account, right, you can open one with Interpack also, and then with Interpack you can start to trade warrants already, right? Did I tell you that warrant are also don't require that much capital, because all warrant right now is priced below 1 ringgit, right? So for example, if you go into Tenaga shares, right, it's at 14 ringgit plus or 13 ringgit plus, right? But warrants of Tenaga is just 20 cent, 50 cent. So that's what I mean lah.
Exactly.
Yep.
Yeah. So before we wrap up, I just want to take a minute to introduce our iPad Online. So currently we have our WhatsApp community for our clients. So in the community, we will be updating the daily market catalyst or some of the stocks picked just to keep you updated with the market. So if you are not the client yet, so feel free to reach out us, scan the QR code, contact me, and we will reach you out after the sessions, and we are happy to help you to start it. And if you want to trade some more the structured warrants, and you are welcome to open a trading accounts with us on the packonline.com. So we are pleasure to have Afik tonight, as a guest speaker to sharing his expertise. And thank you everyone for joining us tonight. I hope you find these sessions helpful and feel more confident exploring structured warrants. So until the next time, happy trading and stay safe. Thank you.
Thank you, everyone.
Thank you.